The following podcast contains strong opinions from strong men. It is meant for entertainment purposes only. It does not constitute medical advice. Please enjoy responsibly.
CD Financial, where health meets wealth.
Welcome back, everybody, to the CD Financial Podcast. As always, CD Financial, where health meets wealth. I'm Marcus C., your host. The man across from me is Chuck D., as always, the man with the plan. And today, quite literally, across from me, because I'm in Southern California right now, Chuck, how the heck are you?
So yesterday we saw a mola mola.
Mola mola. So nice they named it twice. What in the world is a mola mola?
It's also known as a California sunfish.
Sunfish, yes.
If you've never seen one of these, they look so unusual, strange. I remember Tony took us out on his little boat, and we had a pod of dolphins
that was
that
awesome.
were following us. Yeah. Oh, you were on the one.
We went one time and had a pod of probably a couple hundred dolphins.
Yeah,
fantastic.
but you didn't see that mola mola that day.
No, that day we didn't.
Yeah. So we went off the second time Tony took us, and we went off swimming just a little bit deep. I go like this because it's deep blue, and you can't see. I mean, it's just gone, right? I don't think we're that far off the coast, but it's deep. Right, when you're swimming out there,
you can't tippy toe. In other words, you're gonna be tippy toe.
When you're
bouncing.
swimming out there, you wonder what's going on. Right, it's so vast.
Oh yeah.
Yeah. Anyway, we weren't that far off shore though. Maybe several miles. Tony said. Anyway, I was the last person to get back in the boat. As I turned around, I saw this figure coming up, but it was skinny. I saw it coming up, and then there's like flash on the side, and it looked like.
They're big lips, right? Like
yeah, but they weren't. I've seen the close-ups. They don't have big lips. It just looks like their mouth is open, right? And the mouth's not big. And it looks like if you took this conference table and just turned it sideways, put a fin, upper and lower, it was cool. But I guess as they get towards the surface, the sunlight gleams off the side of their belly, and it looks like sunshine. So the California sunfish.
Very nice.
Mola mola.
Mola mola.
Very cool.
Kind of like the birth of Venus, if it was a fish.
I don't even know where you're going with that, dude. What?
We'll just leave that one out there.
Okay, good.
If you don't know the birth of Venus, you can look it up.
What was I going to say? Yeah, I don't want to get into Greek mythology this morning. What were we going to say, Mark, about the mola mola? Oh, we might be able to share it.
Oh, great.
Or we might be able to plop some of the footage from the mola mola yesterday on the whale watching.
Great. I don't know if you mentioned this already, but due to the delay flight, we missed that whole whale watching experience.
I did mention it.
Frustrating. Anyway, but I'm glad you saw
we had
sunfish.
A fantastic
yes.
day anyway. Yeah.
Excellent. So let's see if we can get that video clip. I would
right
love
on.
to see it. I need to see that.
Right on.
So, all right. So topic for today.
Yes.
Topic for today was a little surprising to me when you brought this up. Life insurance, right? And the reason is because the first thing that comes to mind when we discuss life insurance is, in my head, it seems pretty self-explanatory, right? It's life insurance, safety net, you die, that's when it comes into effect. You're telling me there's more to it.
Oh, yeah. Yeah, absolutely. Well, because I look back, Mark, when my parents each, separately, my dad first passed away. Mm-hmm. And when he passed away, it was nice that Mom knew that there was a life insurance policy there. Yeah. And it helps to ease things financially. Even if you don't need them eased, just the point that it's there and there'll be a lump sum payment that comes to you. Yeah, it's a real relief.
Right. But in terms of, and I think that's kind of the way we always think about it. It's just kind of an end-of-life thing. There's nothing to it. You pay into it, and then when someone dies, that's the only time you should think about it or it comes into effect. But you're saying there's more to it along the way as well.
Well, sure. If you don't know how much, let's say, that you need or how much you want or what you're trying to accomplish with this life insurance, it could be a gray area. In financial planning, a lot of financial planners don't want to talk about this.
Right. So why won't they talk about it?
Good, I'm glad. Because they don't want to talk about it because early in my career, for instance, I was very life insurance centered. And you're going back 15 and a half years ago. And they don't want to be known as the life insurance guy.
Right.
But because I came from that side of the industry, it helps me understand why it's so important. I'm going to tell you one story. We'll leave the names out, or let's call her Susie. And her husband had let me just say that he was from Glendale.
Okay.
And so there's a lot of this ethnic group up there, and I love these folks.
Yeah.
I love them. They're great. They're a lot of fun. Anyway, him and his partners had a car wash. And I remember meeting with them, and I said, and she, by the way, she worked for a federal agency. Let's leave it at that. So I said to Susie and her husband, I said, listen, with this car wash with you and your two partners, what's the agreement? He says, among our people, it's a handshake.
Yeah.
Yeah, I said, okay, that's nice, but if the three of you put your money in together and you started up this car wash and it's doing good, what happens if, by chance, one of you might pass away early? And he goes, well, it's just between us. That's the agreement. It's a handshake. And I go, well, what does that mean? Like,
Right.
if one of you passed away, what would happen, for instance, for your wife and your two kids? What would happen there? And there was a lot of silence. So he ended up getting, I can remember he ended up getting a life insurance policy, a couple hundred for the life insurance policy.
But when he passed away,
Oh, okay, so you already took the thunder there. That's right, because good-looking guy,
yeah,
in great shape. You wouldn't think, there's no way this guy's, going to die in the next 15, 20 years, right?
Yeah.
I mean, he looked fantastic. Yes, that happened. No, it wasn't. And I was going to say, it must have been about 6 years in. Yeah. And the reason, you don't forget things like this, because it just seemed like he needed something.
Right.
So the amount was decided on, because we talked about, well, how much do I need? The amount was decided on because of the budget, I would say, right? And that it would be something substantial. And basically what happened is when he passed away, that term policy paid his widow, Susie,
Right.
got $200,000. But the nature of life insurance is that it's tax-free. Yeah. So if you get a life insurance policy, let's say you have a $500,000 life insurance policy,
yeah,
and you pass away, every last dollar is going to your loved ones.
yeah,
Whether it be your wife, could be your husband, or your children, your loved ones, they're going to get every dollar of it. See, when they inherit your other stuff, like, for instance, your IRAs, your TSP,
yeah,
your 401ks, if your spouses are listening, right? Then they're inheriting taxable money.
Right.
It was tax deferred. You never paid a dime, folks. You never, on your TSP traditional, that you deferred those taxes. In your IRAs, your 401ks, those taxes were deferred. You made wages, but you said, forget it. I made $100,000. I'm only going to pay on 90,000 here, and that's what you put away. But that money has been growing, tax deferred, tax later the whole time.
Right.
And so when you inherit that money, it's like, it's all sticky. I'm thinking of somebody else who works in the federal court system. Actually, she doesn't. Her husband does, and U.S. federal court. And her dad passed away and left her a really nice, sizable IRA. So it becomes an inherited IRA.
Right.
But here's the thing about that. When it becomes an inherited IRA, when she's taking money out, and if she's working, her husband's working, he's got a really fantastic job. But with a fantastic job comes a really fantastically somewhat high tax bracket. Yeah. And so as she takes money out, and in California, 9% state tax, right? 9.3 if you want to be technical. In a short while, it graduates up there. But if you have a good high-paying job, then, a 1310, 14, 1510 GS employees and WH and NH and all these grade and step employees, you get to 9.3 really fast. Yeah, and now we work with folks, well, lots of families we help in Texas, Colorado, Washington State, Pennsylvania, because I happen to be from there, right? All over God's green earth here. Yeah, we go coast to coast. Florida, quite a bit, right? And Nevada, all those states. I named 4 of them, I think, that are tax-free. So there's that, right? It's really nice to be retired in a state.
Yeah.
Or like Arizona, where it's a really low income tax bracket. Even Colorado, they passed a 4.4 flat tax.
Yeah.
Right? So it's reasonable. Arizona is very reasonable. And then
Texas and Florida with no tax.
Nevada, Washington State.
Yeah.
Yeah, I don't work with a whole lot of folks from Montana or South or North Dakota is also tax-free. Okay. I digressed a little bit, though.
All right, fair enough.
Yeah, that's taxable money. And so I'm going to tell you another story. When my mom, she was the second to pass, 7 years after Dad. When she passed away, and you may have heard this on, folks, you may have heard this on other YouTube videos that I've recorded or with Marcus even.
Possibly.
But when she passed away, the money was divided between 7. There's only 6 of us kids, but the grandkids, 10 of them, they got a 7th part as well. That was kind of cool, right? Divided by 10 grandkids, but they got something. They got a nice nod.
Yeah. But for those who don't know, Charles's mom was a great provider. The woman, I used to love to go visit Charles, Chuck, for a lot of different reasons. We hang out, best friends. But I could show up at any time, day or night, and count on a spread of food for 20, just for me. I'd show up, there's food for 20, and then she would look at me and go, "I'm so sorry, this is all I had. I didn't have to go shopping." This is like carrying me through a desert for 2 weeks. I mean, I'm fine. I don't think I can. I eat a lot, but I can't eat that much. But the woman was wonderful. Go ahead. Sorry. I just have to feel like it.
Yeah, I mean, I sometimes say it sort of comes with the cultural territory, right? But my grandparents on my dad's side were hospitable too. But mom went exceptionally far, being a Lebanese American.
Yes.
Right. Yeah. Her parents were from the old country. When mom passed away, we inherited mostly IRA, right? Yep. The home, it wasn't taxable. You get a step-up cost basis as we record. Those are how the laws are written. But the IRA money was the bulk of it. And when you inherit that kind of money, it's weird. I mean, you could be, in your 40s earning really good, and now you've got this money. And what's more is we were under that required minimum distribution, RMD. And so we were required to distribute the minimum as if we were 73, 74, 75, 76. And so all this money was sticky. You couldn't transfer it to your own IRA account because it's an inherited IRA.
Right.
The only time you can get away from that is when you're married to somebody. And so then if your wife, she loaned, you inherited her.
If she comes back looking for that money, I'm in trouble. Go ahead.
And you inherit that retirement savings account, right? Then it goes in your name and it could be based on your birth date.
Right.
Right. But we're in our 40s. Mom's long gone. She was in her 70s. And right now we're forced to remove this money. Not so with the life insurance that mom had. The life insurance policy. And in Pennsylvania, as I mentioned, I'm a Pittsburgher. In Pennsylvania, there's an estate tax when you pass away. Yep. And so my sister, who was handling the estate for all of us, God bless her for doing it too. Yeah. Right? No kids. And she handled the books for a law firm. She was very proficient at that. Yeah. So that's not really financial planning task as much as it is a bookkeeping task.
Right.
Right. And yes, she talked to me quite a bit through that process, right? And I was able to give advice where I could and where appropriate. Mm-hmm. But that life insurance went right into the account immediately, and it was just a very big convenience. And this is for 6 kids who didn't really need that money to rely on. And yet, even there, it was a huge relief.
Okay.
Yeah.
So then what should we be looking for? I mean, if because this all sounds, again, the why you start out and it just seems like it's end of life, safety net, but just in that short story, it already looks like we're having to pay attention to more detail. So what should we be looking for?
Okay, so let's talk about, in my case, or let's talk about a generic federal family. How about that?
Fair enough.
And let's say let's say they're in retirement, okay? And he's got or she's got a $4,000 pension from the federal government. And maybe they bought the survivor benefit. That was 50% is the most you can get out of the FERS, Federal Employee Retirement System.
Right.
Okay, so let's say they bought a survivor benefit. Well, the income goes from $4,000 to $2,000. And what's more is your pension will be reduced by 10% as well. So that pension, when you elect it, it won't be $4,000. It'll be minus 10%. So it'll be minus $400 from a $4,000 pension in this illustration. So you're going to net immediately 36.
Right.
You're going to bring home 36 plus federal, state tax, federal employees health benefit, FEHB, right? And maybe a little bit of premium for the FEGLI basic group life insurance, the Federal Employees Group Life Insurance. That basic is a good thing to have. Remind me, because we're going to come back to that.
Okay.
Okay, so let's say you've got your $3,600 pension, but your wife will get, or your husband will get half of that, right? And they'll get half of the $4,000, by the way, not the $3,600, but they'll get that. And you've got Social Security. So let's say your Social Security is $2,000. So let's say your spouse is collecting $1,500. Well, they can elect to go up by $500, but guess what they lose? They lose the $1,500.
Lose the 15, yeah.
Right? So you are bringing in $3,600 plus $3,500. Agreed?
Yep.
And maybe whatever you had from your TSP withdrawals, IRA withdrawals, 401k, you had all those combined. Agreed?
Yep.
Yeah. And so your spouse chooses the larger of the two Social Security payments,
Right.
but they only get half of your pension. That's the most they can elect from the survivor benefit, from the federal government's survivor benefit program, their pension program.
Right.
Okay, so they go from $7,000 to $4,000. Yeah. Now you say, well, there's only one person. If you collectively were bringing in $7,000, then it should be enough to have $4,000. Think about this, Mark.
But you're still losing out on quite a bit.
Yeah, it's been said that it's almost the same cost to have two people in a home as it is to have one.
Absolutely.
Because why? You've got, if you still have a mortgage payment, but you've got your regular utilities, right? Your gas, your electric, your water, you got the cell phone bill. Your internet, though, it's the same.
Right.
Right? And when you cook, there's going to be a lot of wasted food for one person.
Absolutely.
Right? And if you have a car, a lot of times in retirement, a lot of folks only have one car. And the insurance on the car is not that much more for a second person.
Exactly.
So when you go from $7,000 in income to $4,000, that's felt. That's felt.
Yep.
Your spouse will feel that. Even though it seems like, well, I got them what I could. Yes, you did. But if you get them that at least a cushion to catch, then it's so much easier. And that cushion is the life insurance.
Right.
Okay? So I want to talk about something else too. When we're talking about life insurance and tax-free benefits from that, you've also got the income replacement that we're right on top of that. Oh, there was another thought that just escaped me.
That's all right. We can table if it comes back in. We can pop into the conversation.
Yeah,
because
absolutely.
I like that.
Yeah. And so you've got this income replacement basically for a little while. Oh, and I know what it was now, Marcus.
Okay,
too.
go ahead.
It was that OPM, the Office of Personnel Management,
Right.
who runs your retirement benefits, basically HR for retirement. They're taking months to process the widow's benefits. So what I'm talking about is your pension, your survivor benefit pension that you qualified for because your spouse reduced their pension by 10% and they bought you the survivor benefit. They're taking 3 to 5 months sometimes. Wow. Yeah. And so what are you going to do when you're expecting the $2,000 check to come in? Yeah. Right? For the next 3, 4, or 5 months that you're not receiving it because OPM has had so many people that retired, so many folks that had so much wisdom, and they're gone. no mentoring to the new school, and they're long gone. And so paperwork is just slogged down.
Yeah.
Oh, and when it comes to like divorce decrees that were issued on folks that have been retiring, same length of time.
Wow.
I know.
So you're talking potentially, if we're using the $2,000 figure, I mean, you're talking about 6,000 to 12,000 delayed, which is not insignificant. I mean, that's a significant amount of money, especially if you're planning on depending on that for your retirement.
Sure, to pay your monthly bills.
Yeah.
Right? Yeah. So you're going to increase maybe your withdrawals from your IRAs if you've created a plan from TSP. And if you still have TSP money, you're going to increase your withdrawals from that to get that done. However, that group life insurance, if you kept basic, most federal employees reduced by 75%.
Okay.
Most of them do that. And when they do that, the premium becomes zero at 65. If they're working and they're older than 65, it'll become zero the moment they retire. If they do, a 75% reduction. But that means they're going to get rid of how much?
That's 25% off the top, right? They're losing.
75% off the top. It's a
75%
reduction.
I'm reading that the other way. Thank you.
So you're keeping.
Yeah. 25%. Yeah.
Yeah. So if you've got, if your pay was 120,000, you're going to keep 30 grand.
Wow.
Yeah. It'll take a little time to reduce, but you're going to keep that 30 grand. So at least you've got that basic group life insurance
Right.
in place. Yeah. And so that's very helpful for the widow or the widower who needs the income monthly and they don't have the income. So now they've at least got a little life insurance.
Yep.
But in that case, you've got to get the death certificate,
Right.
because FEGLI/MetLife is going to require a death certificate to process any kind of a death claim tax-free.
Very
It's
good.
going to have to get that death certificate.
So we're back to FEGLI. Do you want to? Did you said to bring up FEGLI again since you just brought it up? Do you want to?
No, we don't need to.
More? No.
No,
That
I mean,
covers.
Yeah, although
Okay.
some retirees look at their options and say, maybe I'll keep them and I'll only reduce the FEGLI basic by 50%. That's pretty pricey for the basic, 50% reduction. But the options, they're going to crush you. If we're talking about option Bs,
Yeah.
they're very, very expensive.
Wow.
So you might want to look at how to calculate that. If you ask me that, Mark, for a specific family, it's going to be, look, can I make up 6 months to a year of lost income, right? Do we need to pay off the mortgage
Right.
in my untimely death, right? I wouldn't mind talking about dying while working.
Then are we ready to talk about the how? Do you want to get into the how of how this all goes down?
Yeah, so I've talked about the numbers, right? And so you really got your own personal circumstances, and to give advice about amounts and if you need a term or a permanent, I mean, I have both. I have both permanent and term life insurance.
Right.
And in my mid-50s, I've just applied for a sizable term policy because I started to think if I was gone, I'd like it to go really easy for Angie and the kids. Yeah, I've got big Roth accounts, but, not being of age, even 59 and a half, and other factors, I might want her to be able to keep my hard-earned retirement savings. So just in case, I want to get a chunky one so that they just go, phew, thanks, Dad. Thanks, sweetheart. Habibi, you took care of me. Right? I want to do that. So yeah, but that's in my own family circumstances, and I have a permanent life insurance policy that it lasts to age 100 and beyond. So that in itself, right? I think there's a combo, but I don't know what your personal family circumstances are.
Right.
So I couldn't give you advice there. And
Again,
income needs.
Getting back to what we always say is you need a professional. You need someone to guide you along. And this has been a great conversation so far, but I feel like there's a lot more meat on this bone that we need to pick up on, perhaps in another episode, if that's good with you.
Oh, especially if you want to talk about dying while working.
Yes.
And if you want to use that sick and annual leave or just retire, or should you extend your career, I really like to talk about that because that's something that just had to be addressed with our work family and a family that we help.
Excellent. So let's get that on the table for another discussion. But before we head out, do you have a health tip for us today?
Wow. Well, Marcus, as you know,
Yeah,
we just stopped at the farmer's market
I
before
love
we came
farmers
here.
market here.
Every Friday across the highway.
Absolutely.
Across the five, they say the five.
The five.
Out
yes.
out in the West Coast in Cali. Yeah, I think it's because if you said five, there's so many single digits. You say take five. It's like, you mean like to take a break? No, take the five. Yeah. So anyway, yeah, we went there and we had some fantastic non-GMO'd organic
Right.
white corn. Right. So my health tip: if you're gonna buy corn, peel the corn and bite the corn and buy that one ear of corn and all the other ones that you want to, because if it's sweet and it kind of explodes in your mouth when it's not cooked, that's good corn.
It's going to be good stuff.
Right? Yeah. Now, I'd like to talk about genetically modified versus non-GMO'd, but GMO'd corn does not taste like that corn that we just bit into. $1 an ear too. I mean, 7 ears for $7. Wow.
Not
Well,
bad.
how much did you say it was when you were a kid?
So years ago, I remember I grew up in Texas. I lived in Ohio briefly, and in Ohio, because there's a big corn harvest in the fall, you'd get it 8 to 12 ears for $1.
Wow.
That was when the world was black and white. I think I rode a dinosaur to school at that time. But, I remember it because there were times as a young single guy living on my own, man, if I could eat 12 ears of corn for $1, that was set. That was dinner
You didn't
for
need
me.
anything
I
else.
didn't need anything.
Some butter and salt.
Some butter and salt, baby. That's it.
Like butter this one.
$1.50, I'd had dinner. It was great. I loved it.
That's good. That's good. That's good stuff. Yeah. All right.
Okay, so non-GMO, but I will say this. If you're going to pick up the corn at Gelson's and bite into it, they might give you some funny looks. Just throwing that out there now. So you may just want to stick to the farmer's market. So thanks again, everybody, for tuning in to the CD Financial podcast. CD Financial, as always, where health meets wealth. We welcome you back. And we want to remind you that if you want a 15-minute consultation, there is a link below. You can reach Chuck directly and have that conversation, set it up. If you're calling in after hours, leave a message. You do check your messages, right?
I do check my messages.
Leave a message. He will get back to you, I promise. Also, like and subscribe. You have a link to subscribe to these videos, and then you'll be notified as soon as they come in. And we look forward to seeing you next time. I am Marcus C. That man is Chuck D. Love having you here. Thanks for coming.
CD Financial, where health meets wealth.